As we put a bow on 2022, on today's show, Kevin and I are going to be looking ahead to 2023, what we think is going to happen with the stock and crypto markets. Spoiler alert, as always, Kevin, not super optimistic, but you know what? We're going to get his rationale behind it. Before we get going, please like today's show, subscribe to our channel. Nothing we say is financial advice. Please do your own research. This is kind of a macro outlook as far as what's going to happen next year. So, Kevin, we've had a pretty rough 2022. We'll look at some of the charts just to show how rough, but it's been an absolute ass kicking in the stock markets, crypto markets. I saw some, interesting stuff around the housing market today and how poorly that's going right now. So, some would say that hey, we're due for a good year next year, but I don't know if that's the case. And I know that you don't think it is.
Yeah. So clearly 2022 was not a good year just in terms of financial markets. Was it kind of deserved and expected, considering we printed the most amount of money in the United States history within 1 year through stimulus bills? Probably, yeah. I mean, I don't think that it was going to be a catalyst for bullish sentiment. We saw the bullish sentiment from 2020 all the way to the end of 2021 when the bull market ended. But yeah, I'm not surprised that 2022 was bad, and I think a lot of people are really optimistic. I'm optimistic long term. I just don't see it going into 2023. I think there's still some pins that need to be knocked down, and Jerome Powell is going for that spare in that whole I don't know where this analogy is going, but pretty much that the stock market and the traditional markets need to go down. And crypto's already been down a good amount, but there's still a little bit left.
Yeah, there's still, some of these valuations still seem a little bloated. We've seen, the traditional finance markets are closed today in observance of Christmas, but we've seen stuff like Tesla, Netflix, a lot of these businesses that had very bloated prices coming out of COVID take an absolute beating, which is not surprising because a lot of them were propped up by people having extra money from stimulus, not having as much to do now that things are opening back up, trying to get to a place of normal in 2022. We saw the markets just absolutely get wrecked. So let's kind of talk about some of the catalysts for next year's continued sell-off, and then maybe for at some point a turnaround.
Absolutely. So I mean, just looking at the traditional stock markets, let's look at the three major ones: S&P, NASDAQ, Dow Jones. All of those on the weekly are extremely overbought, and the weekly is part of our higher time frame. It's the macro, and we haven't seen the stock market bleed nearly as much as crypto. Crypto kind of led the beginning of the bear market. And we saw, obviously we're down from 69K down to what's the current price of Bitcoin, like 16.8, somewhere around there.
Yeah.
So we've made significant, moves to the downside. But the stock market kind of held strong. And in previous bear markets, obviously crypto in general tends to lead the way and bottom before the traditional markets. So the fact that the stock market looks like it's topping out and the VIX is towards the bottom, like you brought up a few shows ago, I wouldn't be surprised to see those into 2023 by Q1's end, make significant moves to the downside. So that's one of the catalysts I'm thinking of just being terrible for 2023. Obviously, if those markets dump, the dollar is going to go up. It's just the way it is. Risk assets going down, the dollar always pumps. So the DXY, I think, will be getting stronger, and that is completely oversold on the weekly. And it looks like it's just trying to find the last bit of lower time frame momentum shift, and hopefully we get to see that weekly begin to pump as risk assets on the traditional market side begin to dump.
Another thing that we've
go ahead.
I was going to say another thing that we've talked about before that I don't think gets enough attention is just how bad consumer credit is at the moment. How incredibly over leveraged people are there, how reliant they are on credit cards, and the impact that's going to have combined with these declining home values, higher interest rates. So, I don't think people unfortunately, a lot of people don't grasp that when the interest rate goes up, that impacts your credit card rate. And so we've just seen this compounding effect where it's way more expensive to borrow money. Your interest that you're having to pay is going up. Your home value is going down. It's just this cluster of just shit that is so bad, and we really haven't seen play out to its full potential yet.
Absolutely, it's no bueno in terms of consumer credit. That's this month especially, I think is going to impact January and February because we're going to get some of those returns from CPI, inflation, and PPI and all that stuff. And I think that because of the holiday season and people tend to be a little bit more generous with the people they love, maybe not the people they love, but they like to swipe that card around this time of the year. And if the interest continues to go up and you're not paying off your card, that's going to be terrible for retail and just consumers in general. Like, even if you're not an investor, it will affect you pretty much guaranteed. So that's one thing that's really scary. And I think that, I keep forgetting to grab that statistic. I'll have it on for the next show for sure. But it's talking about how credit card debt is currently at the all-time high in the United States. And again, we had inflation at the all-time high and the most amount of money printed within 1 year at the all-time high. So these aren't things that we should be excited about. Like, these aren't numbers that we want to be high. We need all this stuff to come down if we want inflation to come down. And, if people aren't paying off their loans or, repaying their debt, they're going to get destroyed. I mean, we saw in 2008 with just the housing crisis.
Yeah, I think the data coming out in the first quarter of next year is going to be extremely telling. We talk about how the interest, when the Fed raises the interest rates, it's a lagging thing as far as how it impacts inflation numbers, like usually like 6 to 10 months. And so we didn't see the 75 basis point hikes begin until the middle of last year, into, Q2, Q3. So we should, if those are going to work, and that's a big if those are going to work to bring inflation back down, we need to see that happen in Q1. And if we don't, it could definitely be a recipe for like, hey, these inflation numbers, we're not getting back to 2%. We're going to have to wrap our heads around 5% inflation. And how does the Fed deal with that? What does that mean for the economy, short and long term? Like, there's a lot of unanswered questions. And the Q1 data for this next year is incredibly important. The next Fed meeting isn't until January 31st and February 1st. We have, unemployment data, CPI, PPI, all that stuff coming out before then. I think that, right now the expectation, let me pull up real quick from CME Group what the expectation is for the interest rate hike at the February 1st release. So right now, give me a second, just going to keep vamping and talking out loud. So right now they're expecting a 25 basis point hike.
Okay.
It's about a 2-to-1 odds on their probabilities of a 25 versus 50. Now we see that inflation data come in hot, and that number is going to flip immediately. So, we have the next CPI print for December is coming out January 12th. So we got a couple weeks till that, and that is going to, have a huge impact. I believe before that we have unemployment data on January 6th, and then we have PPI data on January 18th. So those reports right there are going to definitely impact the Fed's moves in February and, for Q1, Q2 of next year. Like, there's a lot riding on these reports, in my opinion.
Oh, absolutely. And like, we're still at 7.1% inflation. I mean, that's going to be, that's still a pretty good move to the downside we need to see to get to the, 2% that Powell and the Fed really wants to get at. That's going to take time. It's going to take time. And, I just don't see from now to then, we obviously need to go down. I think the rates are still going to be coming in. We all know that the rates are still going to be coming in until they get to that 2% inflation print. But I'm not bullish going into 2023. Maybe in the later half of the year, if things start to pivot, like, we talked about like that April, May area possibly being a good time of hopefully them laying off the gas on raising rates, but not the beginning of the year. No, not at all.
Yeah. And, you threw out pivot. I think we're looking at a pivot optimistically Q3. Like, if they take their foot off the gas in April and May, I think it's just going to be to let the rates sit where they are for a bit and see if, we can continue to get that number down. Like, if we can see a good move to the downside of inflation in January, and then they see that again in February, that could definitely be their indicator of, okay, we can do smaller rate, 25 basis point hikes. We can see how it plays out. But if we see a hot print in January, all bets are off. 2023 could shape up to be another abysmal year. And, I don't want to manifest this, but my fear is that this turns into like a lost decade. Like, this just gets out of control to where they have, like the train is just completely off the tracks. Because it wouldn't be it wouldn't be the first time that that's
No,
happened.
not at all.
And these things, history does have a tendency to repeat itself. So that's my fear, is that we start to see that number, get hot again. Granted, energy prices are coming down, like gas is coming down. I've seen some positive data that like rent is coming down. So those big parts of inflation are hopefully at their peak. But I'm just I really want the back half of this next year to be a positive one. I'm ready to sit through it, to keep remaining patient. But man, if we get some bad data, I might have to change my outlook and go even more bearish on it.
Yeah, I agree. I hope January, proves me wrong that December was a pretty good month. People don't get hurt too bad. I still think that rates, regardless, are just going to bring the market down in general, because they're not going to stop raising them. But hopefully inflation looks like it's coming down. It looked like it was coming down the past few months. Let's just hope that, they don't take the foot off the gas. They just get through this. And, hopefully, like you said, Q3 of 2023, we might see that pivot. And then maybe we get a bit of a bull run, or we're like in the accumulation phase of one. So it'll be interesting to see.
Yeah, I think that the markets already have priced in another interest rate hike. Like, I don't think by any means are they expecting it to be zero, but
Right.
It does seem like a 25 basis point hike is priced in, and a 50 would definitely send us down further, because that would also then point to the Fed maybe needing to do another 50 the month, the meeting after that, which the market definitely doesn't have priced in at the moment.
Yep. Yeah, I agree.
Okay, so let's get into some of the charts, and let's kind of like zoom out on some of these as well. I know that you like to take the shorter term view, but let's zoom out as well and kind of see what 2022 looked like on these, and what we can kind of anticipate for 2023.
Sounds like a plan to me. Let's pull up the DXY. So, like I was saying earlier, the DXY, you can see this is on the monthly. We see that we're coming down a pretty good amount, right? Now, I wouldn't be surprised, even though that we're coming down on the stochastic RSI and towards this mid-range, that we could go back up. Like, this thing could, change direction. The dollar isn't necessarily something that I look at and say, hey, this is something that's overbought, oversold completely. Therefore, it has to go in one direction or the other. This really depends on what risk assets do. So if risk assets, take a plunge in the next year, in the next quarter itself, we could see this go right back into overbought, and we could pump up again above, let's see, what level is that? That's obviously the 105.69. We want to get above that if we want to see cheaper prices for a lot of assets. But I could see it going to at least 109, maybe get a double top at 114. But if we look at the weekly, we're pretty oversold. So I wouldn't be surprised that things start to change around in 2023 if the risk assets, like the stock market, like we expect it to, begin to take a bit of a hit, and the dollar just starts to pump. People just start having confidence in the dollar for the time being, and that could potentially offer some really cheap assets, whether it's traditional crypto, gold, I don't know, whatever you want to invest in 2023. But yeah, I think the dollar is primed for a good push to the upside. And even if we look down here, we have this pole coming down. We're trading in this parallel channel. These are usually a bull flag where it comes down. We can make lower lows and lower highs. We can see we also were in one here, lower lows, lower highs, and then we bounced out, came to the upside. So these are patterns that we necessarily think of when we look for bullish continuation. And I don't think that this would be any different just looking at the weekly. And then let's go to the monthly one more time to see. Oh, monthly, it's only been 1 month of that, but let's go to the daily. Yeah, daily's trading in it. We can see it clearly. It might come back a little bit down to test one of these support levels, but again, I think that we're waiting for this break of this parallel channel to start seeing some of the sparks fly for the DXY.
I'm curious, and one thing that I need to do a better job of next year for our show is keeping track of what the international markets are doing. But do when we see some of these huge inflation numbers come in from overseas, over in Europe, do we see a pump in the DXY on those days as people kind of look at the dollar as a stronger currency?
I mean, yeah, it's valued against all assets, but obviously, the dollar is probably the strongest, or the reserve currency of the world, you can say. But I think that as people see, say, the euro, dropping below 1-to-1 with the US dollar, something like that, they are going to put their money in maybe the US dollar. But I don't think it's something significant to the point where if we saw all, like, say, the S&P, the Dow Jones, the NASDAQ, all those begin to just tank, I think the dollar would have more of a gut reaction to that as opposed to other currencies. Unless all currencies, just pull like Venezuela or in Argentina and they're like essentially worthless, which could happen. Anything can happen in this world.
Anything could happen, Kev. Okay. Let's move over to BTC. Let's take a look at that. The year
Absolutely.
chart on that is, I'm looking at the year to date, and it is just not what I would call pleasant. But let's dive into that. Like, if we look and see, we're down about about 67, no, actually more than that. I'm wrong. We're down like 70% on the year, so that's not ideal.
No. And the worst part is it definitely could go a little bit lower. Usually it's like between like 75 to 85% that Bitcoin does retrace during some of these bear markets. What I'm looking at on the year to date, as we were taking a look at the 12 monthly, that's a bearish engulfing candle. It literally came all the way down. So it's no question that we're in a bear market. Obviously, we all know that. But yeah, it's not pretty. This looks like a long. I'm not even gonna say it because there's children watching, but that looks terrible right now. Uh, if we look at, that's an infinity candle. So let's go to maybe the daily. So I think it was on the daily that I saw it. I had thought that we had broken out of the parallel channel. However, we're still technically trading in a parallel channel, which also gives me confidence that this move to the downside hasn't happened, and we're waiting for the year 2023 to come along. I think low volumes and then just the holidays don't necessarily bring tons of trading into the space, but we can see the stochastic RSI has not moved at all. It's been pretty, sideways stagnant, and we haven't seen much price change. It's pretty much consolidating. However, it's still consolidating within a parallel channel. And that's bear flag. It's the opposite of what we saw in the DXY. That thing's going to break to the downside, whereas the DXY is going to break to the upside, which also is a good comparison, because if this is doing this and the other one's doing that, then obviously when one of them makes a move, the other is going to make the opposite move. They're not going to go together in either direction. So they're each going to do their own thing. And we're still trading it. We're on the bottom of this trend line. With the stochastic RSI and the daily being pretty low, I think we definitely have some room to maybe this middle trend line, unless we see some type of mass liquidation event where we just shoot up and test the upper level of this trend line that's coming down of this falling wedge. I still say that we're going to break down to the downside. This is a pretty big bear flag in my opinion, and everything in the lower time frames, it's too. Looks like it's just going from overbought to oversold, which is pretty bad considering we're just trading sideways. As we can see, overbought, oversold, overbought, oversold. The amount of the range that we've been trading in for the past, let's see, what difference is that? Like 2-3% up and down. It's a small range. It's not something that really gives me any bullish confidence. But yeah, that's what I see with Bitcoin. And again, I always remind people of this. Those moving averages on the weekly moving averages of the 50 and the 200 are coming closer and closer. And if we don't make any move to the upside, these things are going to collide soon. And obviously, Q4 is almost done. We're going into Q1. We're pretty close, these two hitting each other. I would say it's only a matter of time before they start to connect, collide, and then people begin to start. I said the same thing twice. People start selling. And when they start selling, obviously that's what a lot of big investors, people who have tons of money, institutional money, they want. A lot of retail just kept buying dip this entire way down. That's why we're seeing low volume pumps. We're not seeing anything crazy. There's no strength behind a lot of these moves to the upside. That's why I don't have a lot of confidence that it's going to go up in the short term too much. I think we might go to that upper trend line and get rejected. However, I think the macro is set. We know it's going to go down. There's still plenty of bear market left. And with this falling wedge, I think we're going to follow this pattern all the way to the end until we get a breakout to the bottom, wick down, and then we'll wick back in. And then hopefully we can push out of here, consolidate, and into 2023, hopefully bottom before traditional markets and just start an accumulation phase. An accumulation phase would honestly be great because that gives us the idea that, okay, maybe we're not out of everything yet, but this is probably the best time for us to be buying assets if we are bullish for the macro long term.
Okay. Yeah. One thing that I've always wondered too is, the traditional thought is, Bitcoin retraces 80%. At what point do we does that change? And do we see like, okay, because like the traditional finance markets, they don't retrace 80%, right?
Right.
At what point does crypto become a mature enough asset class to where that retracement number, say, is at 70 and then 60%? Like this, and this, I don't expect you to have an answer for you here, but it's just something that I think about of like, okay, this is what it's been in the past, but it doesn't mean it's going to have to be that way in the future as things get more mainstream, as there is a wider adoption. So just kind of something that I had in mind that, I'll be curious to watch play out in this bear market and future ones as well.
Definitely. I think the big part of that is, like you said, adoption, but also market cap, in the bull market, more money that gets pulled in. Obviously, I think people believe in crypto a little bit more. And obviously we see the market cap increase every time there's a bull market. So I think that in the future, maybe we don't see that 80%, maybe we see 79%, and you slowly work our way down to like 70, 60, to a point where crypto is pretty much on par with traditional markets, which means it would be extremely boring. But for the time being, 80, 75, 80% seems pretty on par. And at least it's a good benchmark for us to know, we know that there is still a good amount of downside left for Bitcoin and other
For
assets.
sure.
All right,
Yep.
let's go to ETH. So I have nothing here. The monthly close is coming in about 5 days. Just know that if we are under 19.6K, it's going down to 14K. We're clearly under that. And we're clearly under 17.54. I don't think it's going to reach there within 5 days. So macro still remains 14K is the next target for major level. Now we're in ETH. And ETH is doing exactly what everything else is doing. It's being very boring. I don't see it. I think, is it in the bull channel? Yeah. So technically it's still in this like bear flag. We came down. Here's the pole rising up. It's just got to play out, I think. Stochastic RSI is not really moving that much. It kind of tailed off and is going sideways with the market itself. Volumes are pretty low, maybe a little bit of red volume coming in. But I don't think we're going to come up to 1338. I don't think we're going to break 13 at all until we make further significant moves. In my opinion, when I look at ETH, I think the main level for me is 1083. This is a level that we whipped off on the daily a couple of times. Right here, we bounced off, found support, bounced down, found support, bounced up. If we look on the weekly, I think there's a couple of those too. Yeah, right here. So definitely on the third time, I think we are going to be coming down. Obviously, if traditional markets come down with everything else and the daily gets overbought pretty soon, that's coming down. Does it hold? I don't know. I don't think it will. I think that there's a magnet pulling most of these altcoins a lot deeper in the next year. And I still think that we need to retest this June low of 877. But obviously, if we retest that and people are panicking again, they're going to sell. And when people sell, the price goes down, and it's just going to create probably like a huge buy order for a lot of people right around that 600 level for ETH. So that's my opinion. Let me look at the monthly real quick for ETH, and then we could see how it's pairing up. Yeah, so we're under here. Next level support for me, obviously we can go down to this 1159. I don't think that's key. I think the key one was right down here at 1083. So I think there is a good move for ETH. Maybe not this before the monthly close, but maybe next month. Into the next 2 months, we should start seeing some negative price action, in my opinion.
Okay, let's as a long-term ETH believer, I'm still holding some. I'm still trying to accumulate when it dips. So, granted, as you mentioned before, the people who just kept buying the dip is kind of part of the problem too. So let's move into our next ones. I know we want to touch on Link, Matic. We can briefly talk about Solana if you want, and then Cardano as well.
Yeah, absolutely. For those bottom ones that I have set up for today, those are just go over quick points, things that I see, but nothing crazy. For Matic, I just want to show that we came back down to the 76.13 level. This was on the monthly. We hit it. We closed above it. We're currently at 80 cents, and it was 76.13. That was the key level. If we close below that, most likely we're going to go a lot lower, either to 64 cent to 66 cent. But like I said, we have 5 days, and is it possible that we see a pretty good negative price action on the monthly close, the yearly close? Yeah, absolutely. This has been a pretty bad year. I wouldn't be surprised if it ends bad too. But let's get this ruler. Let's see how much that would require. For Matic, that would be like a 5% drop, so 4 cents. And obviously, if we close below that on the monthly and the yearly, we're going to go down to that next level on the macro. But if we look at it on the wrong one. We look at it on the weekly to the daily. Let's go to the daily first. We can see that once again we're trading in this bullish flag, and 83 cents is some resistance that I see. Could be, I think it's on the weekly that I see the 83 cents. Yeah, it's on the weekly. We can see that the moving averages are right here, and then we've wicked above it and came down a couple of times. Here's some resistance, support resistance. Broke through it. We could retest it one more time. It'd be rounding out this right here, but I think that from there we were not seeing enough people buying Matic or other assets that we would pretty much go back to here, test this, and I don't know if we would hold support because that next move is pretty big. That's 10 cents it's got to drop. So the 10 to 12 cents, that's like a 14, 15% drop for Matic. Brings us to about 64, 65 cents. Highly likely, I wouldn't be surprised, especially if the dollar, if the dollar comes back and it starts being extremely strong, small moves in the market are going to, cause most of these assets to bleed a little bit more than they normally would. So that's something to keep an eye on. Matic, again, you and me have this bet. Where is it going? Where is it going to be? I think we still have about 5 to 6 months of bear market left, in my opinion, just based off the Bitcoin chart. So from current levels down to where I think it's going, it's about 62%. I think some of these levels right here, 47.
I'm going to win this bet. It's going to happen.
You know how funny it would be if December 1st, it just drops 61%. I want a scam wick. You know how we used to see on FTX when it existed? I just want to see a fat scam wick come down. Caroline flips everybody off, and then it goes right back up. Just liquidate everyone's shorts. Come on, Caroline.
Oh, God. Nope, not happening. We're not going to hit that 30-cent level. We're going to stay above that. There's enough bullish things on Matic on a macro level that has me believing that we're going to stay above 30.
Yeah, Matic is definitely very bullish going into this next bull run. But like I said, anything can happen in this world. I don't know. Maybe they announced that the next CEO is Gary Wang. Anything could happen.
Listen, I put it out on Twitter last night. I'm just going to keep accumulating Matic under $1, and this time next year, my wife and I will start shopping for the yacht that best fits our needs when it comes to Matic. Okay, and she's sitting next to me, fist pumping in the air in excitement. And by God, don't you disappoint me, and don't you disappoint my wife. Okay, Matic, let's keep this rolling.
Make sure he buys at 30 cents then.
Hey, if it goes to 30 cents, I'm absolutely buying. I'm keeping cash on hand. I've tried to do a good job this year of, keeping my costs, not keeping my taxable, amounts down while at the same time accumulating cash so that I can buy some of these opportunities that we're going to see next year. Because like we've talked about over and over ad nauseum, 2023 could be a very good opportunity to accumulate wealth in the coming decade.
Absolutely. Like you said, DoorDash, Uber, teach karate at a strip mall. You can do anything to make some cash on the side.
Teach karate at a strip mall. Okay, Kevin.
True. We're doing well. We gotta make that cash. There's a lot of kids in the All Valley tournament this year. All right, let's go. So we saw Matic. We know where it's going. It's going to 30 cents. Not financial advice. All right, let's go to Link. I can't spell. There we go. Link. All right. So Link's actually pretty funny because this has been doing a little bit different than what Matic was doing, and it's just going sideways. It's consolidating sideways. I look at this and I'm just like, okay, this is really boring for Link. I had this level up here of I think it was 618 to 626 being a possible level of retest and then rejection. The market's just sideways. It's boring for Link. We've been trading in this range between, let's try it here because this is the daily. Yeah. So within 10 cents of 589 to 599 around there. It hasn't been breaking 6 often. It keeps getting rejected around there. So maybe we see one little scam pump going into 2023. But I think that we are on the weekly. Let's see. On the weekly, still got some pretty good moves to the downside available. If the DXY pumps and traditional assets start to tank, we might just start, like I said on the last show, what Fred Durst likes to say, keep on rolling down. 553, obviously we will probably find some support there, but the key one for me is 530, because if we close below 530, what does that tell me? It tells me that we're going sub 5 for Link, and it might just be a capitulation event from there. I honestly think that once we get to some of those crazy levels, people are just going to panic, and the people who have money on the side, the institutional players, the big money, the whales, they are just waiting for the opportunity for retail to stop buying and just fear 100%, start selling nonstop, and just buy at a cheaper level. Like, there's plenty of really great levels for Link I see, and they're highly possible. Like I said, 40 to 60% from where current levels are to this 551, that's 7%, to the key $5.30, that's 10%, to 495, that's 16%, 450, that's 24%, to some of the levels
No,
around.
see, it can't do that, Kevin, because it's already down 80% on the year, so it can't go down to 24%. That math doesn't add up. Math doesn't add up, right?
You're right. Everybody just, I don't know what I'm talking about. I'm just going to buy at these bad levels down here. All right. So nobody follow.
I love when people say that and they're like sincere about it. Like, no, it can't do that because that'd be more than 100 and it can't go down that much. It's like, oh God.
That's like the guy. What's heavier, 1,000 pounds of rocks or 1,000 pounds of feathers?
Yeah.
Like that.
So I was looking at the yearly, and it is down. Link hit its yearly highs in January. It's down like 80% since then, and we've been trading. Like, we've traded sideways since like May 11th.
Boring.
It has it's had some runs up and right back down, but it's really pretty much the same price today as it was May 11th. Like, that is just a whole lot of crab walking there.
Yeah, that's what we call a macro bear flag, and we haven't even seen the bottom of the pole yet. And trust me, Link will show us that pole, but not today. In the coming future. All right.
Okay.
So that's what I got for Link. The bottom level that I have is $2.91. That'd be a 50% from current levels, which is still highly likely. It's possible. So we just need to keep an eye on it, stay vigilant, watch out for Link. I just want to go to Cardano real quick, super fast with these because there's nothing really too much to note. As I was talking about Cardano last time, that there was a key level on the monthly that was 32.96. We went under that pretty substantially in December. As we can see, we're all the way down, and we're actually under another level of support, which is 28 cents. What that tells me is that we are rolling pretty much on the monthly. Maybe we retest this next month. We get a wick up here, but I think that we're going to be testing some of these levels of 18 cents and 16 cents in the coming maybe 2 to 3 months. Just something to keep in mind, because there is tons of opportunity with Cardano, in my opinion. It's pretty awesome that you don't have to lock your bags when you stake it. You can take it off. You get paid every 5 days. So that's why I'm super bullish on Cardano if you're in terms of passive income. But a lot of people are accumulating around here. I just think that, the macros tell me something different. And maybe I'm wrong, but that looks like a really good opportunity to get a double bounce from it, like 18 or 16, even 15 cents. So we'll have to watch and see for that one.
Okay. Do you have any comments on Solana before we wrap it up?
Yeah. So actually, I want to go. Let's go to Quant real quick because I just want to show this. I know what's his name. Ace. Ace brought it up the other day. He wanted me to check into it. Let's go to Binance. This is a head and shoulders pattern. That's what the adults call it. I see it right here. And it's not necessarily something that we want to see for bullish continuation. So here's the left shoulder, here's the head, and here's the right shoulder. These most likely will come down to will shoot to the downside. And in this bear market, we were trading in this huge bear flag, and it looks like we're going to break out of this. I think we have a head and shoulders within a bear flag, which tells me that we're going to come down. What's that level? I don't know. Quant's a pretty new project. I would expect at least a retest of the low, maybe even go a little bit lower. Might offer some good opportunity. A ton of people are bullish on Quant, but that's just something I saw the other day. Let's go to Solana, your favorite. All right, here we are, Solana. Key level for me was always the 1094, because sub 1094 means that we're going to be going to $4.15 at some point in the future. Some point. All right, whether it decides to do that in a 20-minute period like Luna or FTT. I think that if we close below this blue line, this is the daily, obviously. If we close on below this blue line on the monthly, we're going to be moving.
You're going
down.
a little robotic on me there, Kev.
Can you see me? Can you see me? All good? Strip mall
bit. Oh,
karate.
there we go. We're
All right, there we go. That karate I've been teaching, paying off, fixes the Wi-Fi. All right. So as we can see with Solana, we're coming down. This is similar to the DXY. This is a bull flag, so I wouldn't be surprised if we break out of this and retest. But the key level for me, for it to close beneath on the monthly, is at 1094. 1094 tells me that we're going much, much lower, maybe to 7 cents. I mean, not 7 cents. Could be 7 cents one day. You know, if you guys, I meant $7 for the principal support, but I mean, 7 cents is possible. I mean, nothing is impossible when it comes to some of these projects like Solana, FTT, and Luna. But anyways, if we close below this, we can see on this monthly chart, we are going way down, boy. We are going all the way down to probably about $4.15. Maybe find some support at $6, but that doesn't look like a lot of support to me. Solana's been around for very, very little. Since when? Like 2021, 2022, maybe at the end. So I think this 415 level is the macro level for Solana. But if we break this level down here at 1094, that's a pretty Tom Petty is singing free falling all the way down.
7 cents, that would be something. Are we gonna see the day where Doge is more valuable per token than Solana?
I mean, I wouldn't count out Doge
in Elon's world, yes.
I wouldn't count on Doge for the next bull run. Maybe we'll talk about it when we talk about, different projects that, I'm looking at for the bull run. Is it ever a bad idea to put a little bit into some meme coin, make out of nowhere like $1 billion? No, but at the same time, I don't trust any of them. So we'll see.
We can do a show where we build out like a moon bag for the next cycle.
I would really like to do that because there's a bunch that I'm trying to set up my portfolio right now, which ones are worth keeping an eye on so I don't have to do too much work. So we should definitely bring that on maybe in 2023.
Okay. I like it. Anything else before we wrap it for today?
Let's wrap it up. I'm doing great.
All right, man. Thank you, everybody, for watching. That is going to do it for our show today. We have another episode coming out Thursday. That one is going to be focused mainly on how to set up TradingView. So if you're new to looking at the charts and everything and you want to have better data points on there, Kevin is going to walk us through that. That's his area, not mine, for sure. So that'll be out on Thursday. You can watch this video on Monday, and then we'll be back looking ahead to 2020 or looking at 2023, diving deep into it next week on Monday, January 2nd. Hopefully everyone had a great year. You survived it. If you survived this long through this market, don't give up now, okay? There's greener pastures ahead. It just might be a little rocky until we get there.
Yeah. Just be safe. Don't party too hard on New Year's Eve, and make sure you just stack that cash. That's all I got to say.
All right. Thanks, everybody, for watching. Once again, please like today's show. Subscribe to our channel. If you think that we do a decent job or even a good job, please share us with as many people as you know who are trying to learn more about crypto. We love to help and educate. So for Kevin, I am Jeremy. Thank you, everybody, for watching. Have a great day. We will see you next time.
Later.